Prashant Prabhakaran, Senior President and CEO, Yes Securities, joins in with his perspective on the market. Prashant, it's good to have you on the show. Thanks very much for taking out the time. What are you advising clients to do as we close out 2018?
So frankly, it's a time to sit and wait. You will get opportunities, and choose your stocks and be ready. I'm sure that you will get opportunities that in Q4 when you can pick up books and hold on to it. Right now, I think so we are at the close to the top of the market. I think so at around 11,000, 11,100. You will be at around 28 multiples as far as earnings are concerned. Highly uncomfortable with those numbers. And at the bottom, I don't see too much of a bottom beyond 10,400 or 10,350 as it was tested the last time. So the market should move within this range. But volatility will be high. You have events that will keep on coming about. So you sit and wait. I'm sure you'll get enough stocks that you can pick up in your portfolio in the next one quarter.
Prashant, doesn't seem like you're too enthused about the strength that market has shown off late, and the fact that we managed to even shrug off global weakness in the last 2 days, I guess, are a befitting example of the same.
The reason is simple. I'm purely talking from a valuation perspective. We have been talking, if you are looking at the present earnings multiples that we have given, then you're talking about practically a 20 to 22% growth in earnings that we are anticipating. I don't see that coming, at least in the near future. You are at least 2 to 3 quarters away from even looking at a 15% growth that we are talking about. So if that is true, then invariably, finally, fundamentals hold good when you are investing in this market. And logically, if that has to correct, it will come down to these levels that we are talking about, maybe at 10,400, 500. Because there are not too many negatives, if there is an event which unfolds, you will see much lower levels. But upper end, how far can you go? How far will you give value for something that has not happened and you're anticipating that it will happen?
Prashant, let's discuss, or let's our Q&A be revolving around your assumption that market would be in a range, 11,000, 11,100 on the higher side, and 10,000 is the worst case scenario, as you are saying. Historically, we have seen that most of the time, not always, that if markets get stuck in a range, mid-cap space tend to outperform. What are the mid-cap stocks which you are, betting on when it comes to Yes Securities? Because when I see top bets, I see more of, large-cap names. Yes, there is RBL, Bajaj Corp and Hawkins. Why are you liking these names?
All for reasons which are nothing related to valuations, nothing related to the levels that we are at, but purely by way of valuation. There is another stock that we have actually looked in the NBFC space, which we are preferring for buying maybe in around February, March, which is Shriram Transport Finance in that level. So I'll go one by one. Let's go to Hawkins, a beautiful company, an ROC of practically 76%, which is unheard of in most of the markets. It has managed to have an expansion which was done in 2011, and you still have excess capacities. It has an asset turnover of practically 10x of what it produces. That means it keeps on producing that many more, and it has a market. It has 50% of the organized market as far as cookers is concerned. 85% of its revenue comes in from cookers, and another 19%, around 15% comes in from cookerware. So an amazing company. The only problem with this stock is that it has very low liquidity as far as the stock is concerned. But if it's a typical portfolio stock which will keep on giving you returns of at least 16-17% CAGR if you can continue holding it for the long run. A pure fundamental play based on its results that it has managed to give over the last few years and continues to have a strong growth. We assume that there will be a growth of around 17% as far as earnings is concerned for the current year that is going by, and it will keep on going to around 17.5% for the next year. So it's a story to ride over, and it's a consumption story, a GST story which will get translated. 50% of the market is unorganized, so there will be a transition that will happen as and when enforcement happens on that front. The second stock is Bajaj Corp. Again, a large transformation in the business that has happened. It was a wholesale player. Nearly 55% of its top line was from wholesale funding. It is the second largest oil producer in the market. It is entering into the new skincare segment. a hair segment that they are entering in newly. So you have growth stories that are clearly visible, and we are sure that there will be earnings that will follow by. Similarly, Shriram Transport and NBFC, the good portion is that they operate in a segment where very few have managed to survive over the last 3 or 4 decades. They are into the commercial vehicle financing space, and that to the used commercial vehicle financing space. They have around 85% of their top line coming from that, and an AUM of 1 lakh crores. All brilliant stories, all having growth potentials, and all which have managed to pass on all your raw material costs to clients and have still managed to continue growth. What better stories to look at rather than looking at the same old stories where you have volatility which is large? I think so it's time to look at good fundamental stories. You'll still find enough to invest in.
Okay, fair enough. How are you looking at Zee Entertainment? Do you have a house view there, given the big downgrade that's coming, which is impacting sentiment on the stock?
So the problem remains, the Zee has been in the news for quite some time. They are ending up trying to reduce their debt quite a bit. Interest play that they end up foregoing every quarter is a large sum of their entire balance sheet out. The promoter is trying to play stock, at least it has been in the news for the last couple of quarters. And finally, when interest costs become balloon out of shape, I am assuming that promoter, unless it takes proactive steps to end up reducing the same off, there will be a drag on the balance sheet, and you're not going to get returns for the stock in the short run. Long run, if they manage to end up executing what they have in mind, I'm sure that it will be a story to play out for.
Okay, let's take it back to Prashant Prabhakaran. He's as well been waiting by. Prashant, soon, once we come back from the New Year break, it will be time for earnings again. Where do you now believe there is a significant chance of an earnings revival? Because the next upcoming quarter is where everyone believes you're going to finally see an earnings revival come by after almost a year-long wait.
Ayesha, actually the current quarter that is going by, both on the auto space, will continue to disappoint. The only area that I can see some amount of growth that will be there will be in the banking space, not in the NBFC. I'm talking about purely in the banking space, because there has been a shift of business from NBFCs to PSU and private banks on the opposite side. Your consumption stories will continue to be strong. I'm talking about the FMCG space. An 8 to 10% growth is what I'm talking about in that space, and typically that will end up resulting into a growth as far as bottom line is concerned in the 12 to 15% range. But as I said earlier, the valuations that we are going on at this point of time, I think so we'll be disappointed with this Q2 earnings that is going to be there. And IT, the margins will be flatter with a downward bias that is going to be there. Pharma, there is going to be pressure not on the margin side but on the top line side, so it might disappoint on that side. So frankly, the safest bets to play around at this point of time would be your banking and your consumption space that is there. Metals and commodities remain as volatile as it is at this point. That is why I said that Q4 you will get enough opportunities when stocks will be available at lower valuations to end up picking up and building up a book to end up tiding over your general election volatility that will come about.
Okay. Prasanth, how are you looking at the consumer stories in the market right now, and where is it that your bias would be from a consumption standpoint to exploit that theme? Because autos seem to be hitting a bit of a roadblock.
So the last time that I came, the 3 stories that we had talked about were all consumption related. This time also 2 that I have spoken about, which is Hawkins and Bajaj Corp. The new stories that have been published from the research desk are also consumption stories that are going to be there. We like the FMCG space because it is safer. Hawkins, again, the debt to equity ratio is lower, so you need low debt companies with standard consistent growth patterns that are possible to tide over volatile times. Once you have high levels of volatility and valuations come down to reasonable levels, then it is time to end up looking at a mid cap and a small cap, a basket to be created, which will give you an alpha over your nifty returns that you'll end up seeing. Frankly speaking, 2019 will be a better year, post this entire volatility getting over till the elections portions get over.
Prashant, financial space, and I asked this question to my previous guest, fundamental guest as well. PSU banking space, they have stopped falling. We are not seeing any big fervor as such, but negative news is not leading to any substantial downside in these names. How are you viewing at Yes Securities some of these names? Do you think any of mid-cap banking space or large-cap barring SBI have any value to offer at this point of time from investment perspective, say if not 1 year, but from 2 to 3 years perspective?
So you have obviously SBI, which needs to be part of your portfolio. The reason why PSU banks have stopped falling and the fact that it will stop, you won't see a downside which will be large in this space, reasons are two. One is that the NBFC crisis, the biggest beneficiaries have been the PSU banking space. They have managed to end up taking the best book that has been there from NBFCs, which has downsold it to these banks. And they have also bought it at a rate which is far, far more attractive that is there. That is one. The second thing is they are lending to the same PSU, the NBFC space is going to be at least at 150 basis points higher than what they had managed to keep their lending cycles going earlier on. So PSU banks, without having to put in too much of effort, giving you an example, the last buying that happened by SBI from the NBFC's book was around 50,000 odd crores. That is without putting in a single rupee effort. All that you have to do is negotiate it well, and they have taken the best credit away from NBFCs. And that is why most of your mid-level NBFCs, which had found it difficult to raise money, have lost their book, and that is why they won't see an uptick very quickly in the market. They'll have a lull before they end up starting to build up a book again. In the mid-cap space, that the one that we like has been Vijaya Bank. The bank which has managed to end up keeping GNPA levels in the range of 8–8.5%, which has been way higher, lower than what the other PSU banks had managed to do. Their lending credentials have been fairly stable, and they have also managed to end up diversifying and increasing their retail lending space that is there. They have crossed the 50% mark as far as retail lending is concerned, and that augurs well for the bank in the mid-cap space that we are talking about.
Okay, just about 10 minutes to go before we wrap up trade for the day. One more question, Prashant, that I wanted to take up with you is your call on OMCs. Do they hold ground?
I unfortunately am not able to predict crude anyway. That has been happening. It has been extremely volatile. And if you're not able to take a call on the crude, it is very difficult to end up giving a call to end up buying or selling OMCs. A downward cycle will at some point of time taper off. Needless to say, break-even points for countries which are producing crude are way, way higher than what the present prevailing price is. Even US shale is supposed to be at $65 when they break even for the production that they are ending up doing. Whereas the Middle East is way, way higher, practically $20 higher than that. So they are not going to be continuing to have a downward spiral the way it is happening. And the moment they start reversing, OMCs will have a problem overall. So I don't think so it is a space that you should put in your hands right now. I think so you should stay away and look from the sidelines till you end up getting stability in the prices that remains constant for at least 2 quarters.
Market is also doing, Prashant, because OMCs are not reacting to fall in crude oil prices, but aviation space is. Thank you so much for joining us and sharing your insight on markets and host of stocks and sectors which we discussed.